Are you a biotech funder struggling to raise capital, feeling overwhelmed, feeling stressed, and wondering, what are you missing? Well, you're not alone. And more importantly, you're not out of options. Over the past few years, I've spoken with hundreds of early-stage biotech teams, even some of the most brilliant scientists with incredible data and game-changing platforms, hit a wall when it comes to fundraising. Here's the truth. It's not always your fault. The markets are shifting, investors are more cautious, the bar is higher. But here's the good news. There is still so much within your control, and that's where we'll focus today. This isn't a silver bullet, but I'll walk you through a powerful framework I've used with funders to help them move forward. It breaks the big, messy problem of we can't raise capital into 6 clear, manageable steps. Problem, solution, positioning, validation, problem and value creation, and team. And I also share a bonus at the end of this video to bring this to life. Let's get into it. Problem. Want to capture investor attention right away? Start with the patient, not your platform, not the market, a patient-specific problem. Why? Because specificity builds trust. Investors want clarity. What exact population are you targeting? What does the patient journey look like today? How will your solution change it? Don't say, we are working on prostate cancer. Say something like, we are targeting metastatic castration-resistant prostate cancer post-Pluvicto, where survival rate is 12 months and there is no curative option. That's much more powerful. This level of detail shows you are building something real, something a doctor can prescribe and the patient can benefit from it. Solution. Make the science clear, not simplistic. In biotech, the science is everything. Your mechanism of action isn't just one slide. It's the foundation of your future valuation. All you need to do is show how your solution works, what makes it different, and why it matters to the patient. Here's the nuance though. You oversimplify, you lose credibility. If you overcomplicate, you lose attention. Balance is key. For example, Nimbus Therapeutics didn't just say computational chemistry. They explained how their ACC inhibitor avoided lipid accumulation. So it's specific, relevant, grounded in biology. So use analogies, use visuals, but always stay true to your science. Explain it simply so that they understand, and specifically so that they believe. Positioning. Why you? Why now? This is your chance to stand out. I know it's tempting to think your science speaks for itself, but positioning is what sells your story. Investors are choosing where to place their bet. So answer. Who else is in the space? What stage are they at? How are you different? And why that matters clinically. This don't just say there is no cure. That doesn't help if there are phase 2, phase 3 assets already ahead of you. You're not pitching your tech. You're pitching your edge. A while ago, I was frustrated by how many pitch decks failed to stand out. So I built a deck template for early-stage biotech funders. Then I had 21 VC investors from the US and Europe review it. This isn't just a VC issue. Pharma BD executives say the same thing. Position is often unclear. For example, Verve Therapeutics, they entered a crowded gene editing space with a bold focus, a single in vivo based gene editing injection for cardiovascular diseases. That's strong positioning. Validation. Reduce the risk to the investors. VCs aren't scared of science. They are scared of unexplained risks. When investors say you are too early, what they actually mean is you feel too risky. Your job is to show you're thinking ahead. What it means is use the right model for the right question, thoughtful or interpretation of data, transparency about limitations, and a credible path to a strong target product profile, TPP. For example, Early Bio, they gain investor trust, not just with data, with how they thought about disease biology and progression. You don't need perfect data, you need clarity, thoughtfulness, and credibility. As Stanford professor Carol Dweck would say, growth mindset isn't pretending to have all the answer, it's knowing how you get there. Plan and value creation. Show the path, not just the ask. Investors don't fund time, they find progress. Don't ask for $5 million. Show what it buys. You're not raising to survive 18 more months. You're raising to reach a value creation milestone that justifies the next round. Here's a key slide, your development roadmap. And this is what it includes key activities like toxicologies, IND enabling studies, timing of inflection points, connection to future financing events or partnership. And it will also address IP strategies, freedom to operate, potential exit scenarios. Usually want to include a couple. This builds investor confidence. You're not just whinging it, you have a plan. Team, the people who can deliver. This is your credibility slide. Investors want to know who has done this before, who knows the indication, who is accountable for the next milestone. You don't need a huge team, you need a fit for purpose team. And if there are gaps, be honest, show you'll fill them post-raise. Example, Verve Therapeutics didn't just include great science, they had Sekar, leader in cardiogenics, that set the signal. Don't include big names for decoration, show who is truly involved. As Professor Bob Langer would say, persistence, resilience, and surrounding yourself with great people, that's how innovation wins. You're closer than you think. If you're feeling stuck in fundraising, remember, it's not one wall, it's a puzzle. And now you got the pieces. Patient first problem, clear science, sharp positioning, honest validation, milestone-driven plan, strong team. You don't get funded because you have potential. You get funded because you can reduce risk and create value. That's what great funders do. And if you don't want to go through alone, I'm building something for people like yourself, a global online-first community for scientists and medical doctors who want to grow month after month with supports from experts and peers. You can request early access in the link below. I'll share more in future videos. And as I promised, here is a quick bonus for you, just to put things in perspective. If you're raising a $20 million Series A round, how many investors do you think you'll need to talk to? Is it 10, 20, 50, 100? Drop your guess in the comments, stop the video, and stick around to hear what top VCs had to say in a live session. Let's roll the clip.
Investors have very valuable feedback that you can use to adapt your plans. And I was involved in a company called Vlinder where we raised 20 million in April this year. And we approached 120 investors and ultimately found 4 that were wanting to invest in the company. But that was pretty tough, but every time we went back to incorporate the feedback, redevelop the plans, develop new data, and that moved the needle for the investors.
Thank you, Jens. 20 investors approach and only 4. That's to highlight that it is lots of hard work. Fundraising is not as easy as maybe you might perceive by just reading newsletters.
I would just love to interject. I know folks on the line are familiar with the podcast Acquired. It's a great sort of origin story of companies throughout time. And just listen to the Starbucks one, and they approach over 400 investors to get less than $2 million to launch Starbucks. So I think it's just a reminder that grit and resilience is so important in this business, and that's not a reflection of the business not being a good business. Starbucks, I think we can agree, turned out to be a really, really good business, but it can take some time to get that story across and find the right match.